Happy Friday, everybody. Welcome into Mining Stock Daily and our Friday morning long-form interview. We've got two great guests we are going to bring to you today. First, we welcome Samson Lee, our Hong Kong correspondent. We discuss a wide variety of topics, including the Chinese economic recovery. It's been quite impressive since the height of COVID over the last 6 months. And we talk about the government really, they're buying a lot of base metals as well. We cover a lot. Every time I talk to Samson, we have this kind of layout of the land of what we're going to talk about. And I always come up with like half a dozen different questions that spur my interest. So can't tell you how much of a valuable conversation it was to have with Samson. We then turn it over to Rob Sin, CEO Technician. He's got a couple of ideas of mistakes people made when putting their money behind junior resource companies. Also very valuable. Thank you so much to Rob, CEO Technician, for coming on. Special thanks to our full sponsors of Mining Stock Daily. That's Western Copper and Gold, Minera Alamos, Corvus Gold, and Rio 2. We appreciate your continued support of Mining Stock Daily. If you go to miningstockdaily.com, you'll see a list of all of the sponsors. Click on their links, go to their website, maybe peek into their corporate presentations, might see something you like. But without further ado, let's get into my conversation with Samson Lee. Have a great weekend, everybody. Be well and be kind. Welcome back into Mining Stock Daily. This is our first segment and the highlight of our Friday morning in-depth long-form interview. Happy to be welcomed by a guest that always joins us from Hong Kong. He is our China correspondent, Mr. Samson Lee. Samson, it's a pleasure to have you back here on the podcast.
Hi, Trevor. Thanks for inviting me back to your show.
We always have thorough conversations because it seems like you and I always have a lot to chat about. We're going to cover a number of different topics here over the next several minutes. We are going to talk a little bit about the Chinese looking at the U.S. presidential election and politics. We're going to talk about obviously gold, silver, base metals, and some junior mining companies. But first, I really want to spend some time talking to you about the news that we've seen out of China regarding the economic recovery there since COVID. It's been truly astounding.
On a relatively basis, I think, it's outstanding. But considering the figures, I think the Chinese economy is still underperforming compared to a year ago. So I think what has been happening overseas is still having a drag on the Chinese economy as a whole.
Okay. So you mean regarding what's happening overseas, are you speaking specifically about the pandemic and the economic ramifications of it?
Yes, because obviously, right now, I think China as a whole is almost clear in terms of COVID, but for the outside of the country, because the pandemic is actually getting worse, not under control, instead of under control. So I think there are lots of limitations in terms of global trade, or especially potential mergers and acquisitions, because as far as I know, lots of Chinese mining companies have strong interest to acquire projects overseas, but the problem is because of the restriction in terms of traveling, many of them could not actually have a chance to do further diligence in terms of on-site visits. So everything has been holding back.
Okay. We are going to talk about that because the last time you and I talked, we did kind of spend a little bit of time chatting about some of the difficulties just with the geopolitical tensions, maybe China wanting to do more work in companies such as Australia, South America, and you were a little bit pessimistic if that would move forward. But let's table that for a second, because
Sure.
I want to go through these numbers.
Yep.
GDP in Q1
Yes.
at the height of the coronavirus,
Yes.
China reported negative 6.8%.
Yep.
Rebounded a little bit in Q2 to
Yep.
positive 3.2%.
Yep.
Latest numbers in Q3 out of China are almost 5% growth. So it's not. I mean, you talk about a V-shaped recovery, and I know you have to take some of these numbers with a grain of salt, but
Yes.
that's impressive.
Well, to put things in perspective, China's GDP growth in Q3 was actually underperforming the market expectation, as they were initially expecting, like, I think around 5.3%. So like 4.9% is actually underperforming. But the good thing is, the economic growth is actually getting better, especially all figures have been like kind of performing in a very good way in September. So I think right now the Chinese economic data is pointing to the right direction. And as you mentioned that we need to put a grain of salt in terms of GDP numbers. So personally, I actually pay attention to the country's electricity consumption because I think it reveals a greater truth in terms of how much power, how much electricity China consumes, because I think it's positively correlate with economic growth. So in the first 3 quarters this year, the electricity consumption in China has grown about 1.3% year-on-year basis. So I think it is somewhat in line with a 0.7% GDP growth in the first 9 months this year. Yep.
That's
So
quite a big jump.
yeah, yep. And actually, the electricity consumption in September actually picks up even rapidly, up by 7.2% year on year. So, like, to break down the source of power consumption, China's industrial use of electricity has a market share of over 65% of total consumption. So, whenever we see that the electricity consumption picks up at a rapid pace, so first of all, we can assume that the industrial activities in China has been picking up. In fact, if we further break down about the power consumption, the power consumption in China actually fell by 0.2% in the service sector in the first 9 months. So that means that right now the consumption sentiment in China, especially the service sector, has been recovering at a slower pace compared to the industrial sector. And that's why we see that, especially in September, we see that not only the industrial activities have been growing fast, but the exports and the imports figures in September has also been outperforming the market expectation.
So when you talk industrial use, so you're talking the manufacturing
Yep.
of goods, and when you're talking services, are you talking like consumer retail type, food, restaurant, maybe retail consumption type of stuff?
Well, the retail, as I said, has been performing like has been recovering, but at a much slower pace because obviously the country was shut down in the first quarter, and then many companies indeed went bankrupt so far, and the unemployment rate has been increasing as well. Even China has been recovering from COVID 6 months ago, but the damage has been done. So understandably, I think the consumption sentiment has been still soft, lately. Like personally, I'm a collector of like ancient coins and banknotes, and I actually try to participate online auctions in China like almost every week. So like I have a pretty good sense on the collectible sentiment in China, and I can tell you that for normal stuff. Like not really high-end stuff, like the price of the hammer price of the normal stuff have been actually falling like maybe about at least 20 to 30% from the hammer price, like maybe 3 to 4 months ago. So I think that the consumption sentiment has actually been weakening instead of half turning around the corner. But on the other hand, the good sign is the industrial activities, as you said, the manufacturing activities have been picking up, especially in September, because as far as I know, um, the pandemic outside of China has been actually benefiting China in terms of manufacturing activities, because I know that many other parts of countries in the world, because of the pandemic, they couldn't open full capacity on their manufacturing side. So many orders have actually been reallocated to China in the last month or so. So right now, the manufacturing activities in China has been picking up at a very fast pace. So I think right now, this is one of the major reasons why we see that China has been importing relatively large quantities of iron ore, copper, and other raw materials, because their manufacturing activities have been picking up, and they are trying to, replacing the capacities that was not originally in other parts of countries like India or Western countries because of the pandemic.
Okay, so I want to back up. I do want to spend that time about the industrial manufacturing complex there. But you
Sure.
mentioned something earlier. I just want to follow up on. You said that prices of normal things, normal items, have been falling. Is there a case of deflation in China because of this?
Um, the prices of normal items have been falling. Was specifically regarding to collectibles.
Okay. Okay.
But at the same time, the really high-end collectible stuff has actually been increasing. So I think this is what is happening in China or in Hong Kong is we are seeing deflation and inflation at the same time. It really depends on what kind of product you are mentioning. For products for normal people, or even for the grassroots, I think actually the prices have been decreasing because as the demand has been falling, as well as the grassroots have been trying to cutting down their costs. Because, for example, as I said, unemployment rate increasing, and then like they try to save more money, but at the same time, for some really relatively high-end stuff, I think actually the prices or the costs have been increasing at the same time. For example, like in Hong Kong, I usually go to a barber like every month, and then before the pandemic, um, the co- like the cost of cutting hair at my barber shop before and after the pandemic, the costs have risen like maybe around 30%.
Hmm.
Yeah, I was surprised as well because I was actually thinking like they have to cut the price because of the poor economy in Hong Kong, but surprisingly, they have actually hiked up the price, and um, it's still packed.
Yeah.
So I think at the end of the day, it really depends on the demand and supply, and for the grassroots products, I think the demand has been falling, and that's why the price have been uh, uh, going downwards as well. But For the more expensive stuff, high-end stuff, the price have actually been increasing.
Oh, very interesting. I mean, you just kind of I compare it a little bit from what you just told me to what we're seeing here in the States, and just from my observation, food is increasing in prices. I see it on the meat bill. Beef has gone up. Pork has seemed to have gone down. Uh, we're seeing other relative, just basic home goods, toilet paper, paper products going up. How residential housing has not missed a beat. In fact, residential housing prices throughout the country have gone up because of people fleeing the big cities and going into the suburbs or other places outside the big cities. So it's just an interesting comparison to see, just what I observe from my everyday life, and then hearing what's happening and what you are seeing from Hong Kong and China. So very interesting.
Yeah, I think in the longer run, I believe food prices will increase as well in China. As you mentioned, that I'm kind of a pessimistic about the geopolitical risk in the next few years, including the relationship between China and the US. So I think in the longer run, I think global trade in terms of food may kind of declining, and China will have to rely more and more on self-production in terms of food. So I think in the long run, because of cut down in global trade, and then there will be less synergy, and then cost of many things, including food, will have to go up in the
Yeah,
future.
yeah. Another thing you mentioned, so exports to China rose
Yep.
almost 10% in September, and industrial activities were also picking up. And you kind of attribute this to because China's been able to recover from the pandemic faster than a number of other countries that also have big industrial complexes. You think that China's been able to kind of take in some of that work and kind of feed the global consumer, right?
Yes, but I think it's only for a short period of time. Because as long as the pandemic situation in other countries have become under control, and then the industrial activities in these countries have begun to picking up. And then I think these orders will be reallocated back to these countries. For example, I hear that lots of textile orders, which was initially allocated to India, have been reallocated to China. So from what I have heard, that many Chinese people working in the textile industry has claimed that the massive orders they have received has been at highest level they have ever seen since they have been in the industry in the last maybe 10 or 20 years. But as I said, I think this is temporary, and how long will it last? It really depends on how quickly the pandemic will be under control in other parts of the world. Yes.
Yeah. Okay. So you're basically we looked at a 6 month timetable for the turnaround for China. If you look at kind of the bottom from Q1 into
Yes.
September, um, it's pretty remarkable. I mean, here in the United States, I mean, I'm going to be honest with you, Samson, to think that we could even turn this thing around here in 6 months here, I just, it makes me shake my head. That I am pessimistic about. Um, I mean, that's a pretty quick time, a pretty quick schedule on the global scale of things with this pandemic.
Yes. So I think other countries can use China's schedule as a guidance on how quick the Western economy, in theory, can recover. So I think as everyone's attention now, other than the U.S. presidential election, is about the timetable of a vaccine. When an effective vaccine can come out to treat the mass population. Personally, I'm not too optimistic. I think by the time an effective proven vaccine is out to the market available for the mass population, I think it has to be like sometime in the second half of next year, yeah, year 2021.
Mm.
So apply another 6 months, starting the mass population in other parts of the world taking an effective vaccine. So we are looking that the global economy will not back to normal or close to the normal levels until probably the second half of year 2022. So that means in the next 1 year or so, I expect the global economy may be slowly recovering, maybe modestly better than what we are seeing right now, but not by much.
Just do the Chinese have this same mentality towards the vaccine as the Western countries do? As you know, we're kind of just waiting for that vaccine to be approved, be released, taken by the masses, and everything will be fine. Or are the Chinese just say, we're going to do what we have to do the hard way and get through this without the vaccine?
Um, I think the mass population are still trying to rely on the vaccine, and right now, I think the Chinese developed vaccine is already like slowly getting into the population. But right now, I think only about 60,000 people out of over 30 million population have already taken the local developed vaccine. So more and more people are starting to take a vaccine, but it's still a far cry from the majority of the population has taken it. But certainly, the majority of the population are looking forward to take the vaccine. But at the same time, the government officials are very cautious of a potential, third wave or fourth wave attack of COVID in the winter.
Okay, so this is just fascinating stuff. We have
Yes.
to turn it to gold and silver, precious metals, because
Yep.
we're gold bugs, and that's what we do. We can't have any conversation about anything without turning it into the yellow metal, as that highlights our
Yep.
lives. You kind of paint a pretty bleak picture here,
Yep.
economically, over the next year or two.
Yep.
So what does this mean for these monetary metals?
Well, because as I said, to have a more reasonable timeline for the whole global economy to starting to, trying to get back to the normal levels, it will take at least maybe the second half of year 2022. Because I expect an effective vaccine starting to get into the majority of the global population won't happen until the second half of next year, and then I will give another 6 months of time at least for the global economy to slowly recovering. But after that, once the global economy is starting to getting out from the hole of the pandemic, I am getting pessimistic about the geopolitical risk, because as I mentioned that the relationship between China and the United States probably won't recover no matter who will become the next U.S. president in the upcoming term, because as the political system is the president serves the country, serves the voters. So it doesn't really matter what the president believes in, but more important is what the majority of the voters they want. So I think that the pandemic will, as you said, will make the global economy worse, and not just the United States, but most of the countries. They will be put more attention on job creation. They want more local jobs. They will try to nix more global trades. They will oppose of global trades. So I think in the longer run, the geopolitical risk will increase, and so given the future economic environment, at least in the next maybe 2 or 3 years, there will be massive money printing, more and more debt. The economic growth will be low, or even somehow like contraction in some areas. And possibly further decline of global interest rates because, like, obviously the central banks will have to stimulate economic recovery, and adding the rising geopolitical tensions. I think it would be insane if you believe gold and silver have no value in everyone's portfolio.
Yeah, I'm glad you said this because you are not the first person to come out and say that you believe that no matter who wins the presidential election here in the United States, tensions between the U.S. and China will remain high. I know there's
Yes.
this ongoing dialogue. The GOP and President Trump like to paint Joe Biden as a China favoritist. But
Yep.
you're not the only one. Our friend Chris Temple from the National Investor in recent interviews has said he believes that Biden will be just as tough, if not tougher, on China, because basically the market in the state has leaned that direction of a necessity to do that, and I guess through it, through many of his flaws, maybe that was one of the successes of President Trump.
Well, to be honest, I think there's every possibility that Biden could be actually more anti-China than Trump has been. Because first, traditionally, I think the Democrats have been less friendly to Chinese from a historical perspective. And secondly, obviously Biden will have to like try to to gain his popularity, to have another shot for a second term in case if he wins the upcoming presidential election. On contrary, Trump already wins the if Trump wins, this is already his second term, and in theory, he cannot nominate for a third term of the U.S. Presidency. So, from Trump's perspective, he can actually do more, like to want to introduce more policy on what he believes rather than what his voters want in the second term. While Biden, I think he actually could possibly be more anti-Chinese if the majority of the U.S. voters actually has become more anti-Chinese.
Yeah. Wow. I mean, I hope there's a number of people just kind of sitting back listening to this that are just like, everything that I've been told might be wrong. That's right. We don't know. We don't know what will happen. Okay. Another topic we need to switch to, Samson, is I want to talk to you a little bit about these stories that we are hearing about China and the base metal complex. We have seen reports that China is just going all out gangbusters in, I guess you could call it, hoarding as much base metal, industrial metals as they can. It's an ongoing theme that we see from the country to stimulate economic growth during hard times. Here's some numbers. There was a forecast deficit, speaking of copper, last year of just 52,000 tons. And that is a dramatic change. Excuse me, let me repeat that. There's a forecast deficit now, a small one of 52,000 tons in relation to copper. Last year at the same time, there was expected to be a 280,000 ton surplus. And that it's not massive numbers, but it's enough to make you realize just how much copper China is importing right now.
Yes, I think the pandemic has actually contribute to a supply disruption of copper, especially copper mine supplies, because Latin America has been like one of the largest copper producers in the last few years, but the pandemic has actually been quite severe in these countries. So there has been a disruption in most of the mining materials, but particularly in copper. And to be honest, the copper prices have not been performing that well in the last maybe like 10 years or so. And there has been a severe underinvestment in whether in both in existing or new copper projects. So as the mining industry is very cyclical, the majority reason is because even if the miners start pouring large amount of capital into copper mines today, we probably won't be able to see a massive increase in supply at least in the next 2 to 5 years, because like mining is a very long cycle. In addition that I think that China and other countries will follow in the next few years once the pandemic has been under control. Will try to kickstart the economy by, building massive infrastructure. Copper will be one of the more important materials in terms of infrastructure building, and last but not least, the electrification economy. Many countries have been like upscaling their future production in terms of electric cars. And while many people have been talking about the importance of, like nickel, cobalt, and lithium, I think many people have neglected the important role of copper in electric vehicles. For example, if I remember correctly, I think an average EV will consume about 2 times copper as much as a normal car right now. So definitely, I think copper is and will become more and more important metal in the global economy.
Yeah, it's so. What else is what other of these metals is China really looking to import that going on a spending spree with right now, other than copper?
Yeah, well, because the way of the Chinese are doing things, the transparency is very low. So it really, from what I know, it really depends on from what I hear on the rumors on the streets, and plus some education, I guess. So I think right now, the Chinese have been importing a huge amount of metals, including copper, but I think other than the industrial manufacturing activities have been picking up since September. I think another important angle that many people may not realize is that I think the Chinese government has also been foreseeing that the relationship between the two countries will turn sour like in the next few years. So they have to start building up their, strategic reserves, particularly in base metals and other strategic metals, just in case in the future they may have problems to import these metals in the future. So other than copper, I know an obvious metal that the country will build a strategic reserve is cobalt. And then maybe nickel, lithium are also surefire bets. Other than these, I think other high-end materials being used in high-end technology, tin and other some kind of indium, these kind of minority metals being used in high-end technology will also be heavily sought by the Chinese government.
There are many reasons to be bullish copper right now. I mean, obviously, the price shows that it's in high demand. It's in low production right now. So it's got the supply and demand factor. We see this at times when we think that there's going to be infrastructure spending and more manufacturing that's going to need this metal. We've seen an inflow of long positions in copper, but we're also contrarians here, Samson. when we
Yeah.
see this, the hair kind of stands up in our back a little bit. Do you feel like there's a time to worry about copper right now?
Of course. Like based on what I said, I am very, very bullish on copper in the long run. Actually, I think the copper price in the long term may have more upside compared to gold.
Mm.
However, in the short term, I'm actually quite worried about the copper price because one, when I read the weekly CFTC data, I see that right now the managed money positions in copper, meaning the funds positioning in copper, has been at a very has been at a very high level, like probably the highest level in the last 3 or 4 years right now, and it's just like about 30% lower from its historical high level. Compared to gold and silver, right now their managed net positions is about like 50% lower than the historical high levels. So right now, what is a crowded trade? The crowded trade, I think, is many funds and speculators and people have been they have been longing copper, B, they have been shorting the US dollar, and C, they have been shorting US bonds. These three trades are crowd trades right now. So what I think could possibly happen is um, mostly before and after the US presidential election, no matter who wins, I think the US stock market could there could be like a more significant downside correction happen in the US stock equity market unless the Fed will come up and do something. But I'm kind of bearish on a significant pullback in the U.S. equity market because it has been like overrun, and it has not been actually been supported by fundamentals because, as you mentioned, the U.S. economy has not been doing quite well recently. And C, I don't think there's any more short-term catalyst to help the U.S. equity going higher. And no matter whether it's Biden or Trump, both of them don't have the incentive um, to help the U.S. equity market heading higher when they first become the U.S. President, because both of them would prefer the stock market to go down first initially when they first come into the office so that they can have more room to improve and help to pull up the equity index again towards the end of their terms. So I think if indeed the U.S. equity market starts to correct right after the U.S. presidential election, I think the U.S. equity market and copper will go down, and then the U.S. dollar and the U.S. bonds will go up. So the copper longs and the U.S. dollar shorts and the U.S. bonds shorts will all get killed in the short run.
All right, we've covered just a ton of information, but just focusing on what you just said about potential for a U.S. market correction leading up to or shortly after the U.S. elections. How are you playing this market? What is your strategy here, Samson?
Well, I have been advising people to, like increasing their cash levels, so that they can have more bullets to spend, if there is indeed a bloodbath, in the next maybe 2 months or so. Another troubling sign that I have discovered is, despite the copper price have risen to like close to $3.20 recently, like there have been quite a few copper junior. The stock price of copper juniors failed to, manage to rise in line with the copper price. So in other words, in the last few trading days, I observed that the copper, equity market has been actually underperforming the metal itself, which when I applied the same thing on gold and silver, is usually a bad sign, suggesting that the copper price may be heading down in the next few weeks. So I think I have been suggesting to people or my subscribers of my newsletter that start like taking profits, trying to raise your cash level, and then so that you can take advantage of the upcoming opportunity to buy more high quality gold, silver, and copper names in the upcoming correction.
Sound advice, Samson. I cannot thank you enough. It's we always do this. It's always late in the day for me to connect with you, and almost early enough in the morning to where I hope you had a cup of coffee
Yeah.
to get this conversation. But I will. I don't care if it's a midnight my time to connect with you. It's always just so overwhelmingly valuable to have a conversation with you.
Thank you very much for your compliment, Trevor. I really appreciate it.
Yeah, Samson Lee, tell everybody how they can reach out and connect with you before we let you go.
Yeah, please follow my Twitter. It's at SamsonLee7. I'm happy to get connect with more larger, investment community, whether you're interested in, mining investment or not.
All right. He's our Hong Kong correspondent, as I like to call him, and he's just incredible to have on the show. Samson Lee, we were going to take a short break, and we will be back with our second segment of the show. Hey, before we get into our discussion with Rob, just a quick shout out to everybody out there. I know there is just a ton of online and virtual events happening now through this whole time. I am a media partner with the SOAR Financial German Gold Show, so I just wanted to give a little bit of a plug to that event that's on November 5th and 6th. If you go over to soarfinancial.com, click on that events tab, you should find registration information on to register for the event. He's got a great group of listeners over there, including Rick Rule, Frank Holmes, and Rob McEwen. Willem Middlecoop, who I am scheduled to talk to next week, will also be speaking. I will be attending and happy to be partnering with the SOAR Financial crew to help promote this event. Again, go to soarfinancial.com, click on the events tab, and you should find registration information for the German Gold Show. Okay, we're going to get back to the show with my conversation with Rob Sin, the CEO technician. We're back here on the second segment of our in-depth long-form interview, as we always air on the Friday morning to get you into the last day of trading and through the weekend. Happy to be rejoined by our friend Rob Sin, aka the CEO technician and the Trading Lab. Hey Rob, welcome back.
Thanks, Trevor. I'm glad to be here.
We are just kind of following up. We had a previous conversation on Wednesday. But there's a number of things we wanted to talk about, more or less on the terms of strategies and kind of, looking at mistakes, common mistakes people and speculators might make when putting their capital to work in this sector. Let's cover a few of those and some thoughts that you want to be sure you communicate to our listeners. And obviously, you got to learn from your mistakes. But what are some of the common mistakes that people make?
Yeah, Trevor. So this is something that came to my mind in the past couple of days. I've done blog posts on this, last year, but sort of stuff that's fresh in my mind right now. I think the first one that comes to mind is staying stuck long a stock when the company keeps moving the goalposts, keeps shifting timelines, or fails to meet important milestones. I think that's so important. And we can't be too dogmatic, with this, because obviously there are certain things in terms of timelines that are out of a company's hands, like getting the assays back. The labs, might just be so bogged down that it just, you can't force them to work faster. But there are some things that I think are really important when a company says they're going to carry out certain work on a given time frame. And obviously we want to give them a little bit of leeway with the time frame, but when it's just blatantly not even close to the timelines that were stated months ago, or they just shift focus suddenly. They're focused on one project, and then all of a sudden acquire some new option on a new project, and suddenly that's their flagship. The companies that are not focused don't keep to their word and their own stated objectives and timelines. I think that's a real, I hate to say it, it's a red flag. It's something that should probably cause us to just sell and find a better opportunity. I say that's the first thing on my mind here today.
Rob, let me interject there just with a kind of a follow-up question. Just kind of follow in line. Has been some conversations online with a few of these companies that maybe were a base metal company, and then about midway through the year, they wanted to provide more exposure to their precious metals that they knew that they had, but really wasn't the focus previous. So, a copper company trying to put more focus on their gold assets in the ground, or a zinc company putting more focus on their silver credits in the ground. Does that kind of fall in the same line here?
Yeah, Trevor, that's a great question. I mean, I would say there's no 100% clear answer to that question, but I would say you as the investor, as the shareholder, you need to ask yourself, is this a real project? Does this project have real merits? Or is it just because there's some gold there and they can put gold in the name so they can raise money or maybe get the share price a little higher? Is it just a short-term thrill, or is it a real project? Does the project have merits? And you have to figure that out for yourself. And I would suggest talking to the company and ask them some probing questions. Find out how they acquired the project. Why is this now a new focus? Is it just because gold or silver, is in the name? And what about the previous flagship project? Well, what's going on with that? I think you just have to figure it out for yourself. But generally speaking, in the junior mining sector, when companies are skipping from project to project to project, not being focused, that is, generally speaking, a negative sign for shareholders.
So you don't necessarily find it a red flag for a company to maybe switch some of their promotional language and provide more maybe emphasis on a precious metal when for the last 5 years they've been a base metal company? Focused.
Well, I mean, okay, so
if it's the same project, if it's the same project, they haven't switched projects.
No, I don't think that's a red flag. I mean, obviously, here's the thing. All these companies that are doing a lot of exploration work need to raise capital to fund their activities. That's a simple fact. And in order to generate the maximum shareholder value, they want to raise capital at the best prices possible, the highest share prices possible on the best terms. And so it's their job to tell their story as effectively as possible in order to get the best valuation for their shares possible. And there's nothing wrong or sleazy about that as long as they are telling the truth.
Okay. Well, this kind of comes back into the lines of promotion versus actual exploration and promotion. And I think I've had this conversation numerous times here on the podcast. It's a double-edged sword. You're damned if you do, you're damned if you don't.
Yeah, so that's another topic that came to my mind. There are some, I'm not going to name names, just going to be a little vague here, and this could probably apply to companies in your portfolio as well. There are some companies that are really good at promotion. They're really good at marketing. They've got a bunch of, writers following them. They have ads popping up everywhere on all these different mining sites. Their CEO attends every conference, and they've got a great slide deck, and they've got all kinds of cool stuff on their website. They're really good at the marketing angle, right? But they're not doing a lot of exploration. There's not a lot of real news flows. There's not a lot of real substance. So when a company is too one-sided to the promo side, I'd say that's a red flag. Then there are companies where the CEO and the chairman are like scientists, and they treat their company's projects like, little science projects. It's their pet science project, and they're carrying out a lot of activities that's sort of under the radar that they can't really, articulate well to the market. And even when they do drill and generate good news flow, they're not very good at telling the story to the market, and they have very little coverage, and nobody really cares about the company. And I'd say that's a red flag. So it's really crucial for a junior mining company to have a balance. You need to be able to tell the story to the market. You need to gain a wider audience, a wider following, more eyeballs on the company and the company news. But also you need to have some real substance, and you need to be putting shareholders' dollars into the ground and not all spent on promotion and into the CEO and the chairman's pockets.
Mineral exploration is a risky business, but I think one of the things that makes it so difficult for a larger demographic to put their capital behind is that it's so technical. It's a hard industry to just jump into and, and kind of pick up and feel like you've got a good grasp on it. I mean, I've been in this for, 6 or 7 years, and every day I learn something new. And I'm sure you've been in it much longer, and I think it's safe to say that every day you learn something new.
Yeah,
because we're not geologists, and,
right.
we're not metallurgists, and so we continue to learn. But do we need to just kind of understand that and be okay with, like, listen, I know geology, I know metallurgy, like I know how to build mines, but what I know most people don't, how do I break this down and make it simple and factual and kind of feed the masses and make it easier?
Yeah, that's really, really good point there, and a good question, Trevor. So, I think we could sort of wrap this up with a couple comments on that, and then one more sort of tip, that I have here. You're right. I'm learning every single day. I've been following the sector. I've been a shareholder in the sector for almost 20 years, and there's always new things to learn. I would say that my number one job as an investor, as a trader, as a shareholder in the junior mining sector is to assemble lots of information from multiple sources and process it and filter it as effectively as I possibly can. I focus on certain people that I find their commentary, their analysis, and their opinions to be much more valuable than everybody else. And then I also process various information from all different sources and filter it through my brain and my knowledge, filter, my knowledge bank, and then I formulate an opinion based upon that. And it's never going to be a perfect opinion. It's never going to be perfect, but it's going to be good enough to do well over the long run. And then I would say, and this is so important because you're right. You said that this sector is so difficult to analyze because some of the knowledge and insights are so specialized, and even people that have that specialized knowledge still get it wrong, right? There's no perfect science. And so that's why bankroll management is so critical. You never want to put yourself in a situation where you've put too much into any one thing. So we kind of have to use a shotgun approach and have a basket of holdings so that we can never get hurt too badly when we get it really wrong. But if we get it really right a few times and we get this 10 baggers or 20 baggers, we'll make more than enough to make up for any bad investment choices. So I'll just leave that there. Then I want to add one more thing and we can wrap this up. So I think that one of the things that's come really into my vision recently is so often, I think, in this sector, when we sell a company, we sell a stock, let's say we sell for a loss. It didn't go well while we owned it. And then we sort of just like put it into our trash basket. We don't want to look at that company and its news flow with the same set of eyes as we did when we owned it. And so I think that sometimes we cost ourselves and we miss out on new opportunities when we sort of put that stock into the basket of stocks that I'll never buy again. Because sometimes stories change. The new CEO comes on board, a new management team comes on board. Maybe the company is completely overhauled in terms of its project portfolio, or just the market changes. Maybe the price of gold went up so high that suddenly now all this company's mining operations are super profitable and the projects look much more attractive. All kinds of things can change. And I think that when the facts change, when they change enough, sometimes we really have to change our mind. And if we get too stubborn or too biased a certain way, that's when we either make big mistakes or we miss out on big opportunities in the market.
Rob, I always enjoy your words of wisdom when you come on the show.
Thank you. I appreciate that.
I do. I like it. It was a year ago when we were in the Yukon where you and I first touched base and met in person. Ever since then, man, I'm telling you, I don't take these conversations for granted at all.
Well, thank you. I don't either, and I appreciate every invitation that you send me. And I wish you a very profitable, week of trading here in the market, and hopefully the juniors do catch an end of year rally.
Yeah, absolutely. After this week, it's looking okay, ain't it? So,
yeah.
All right, Rob. Thanks so much, buddy. Take care of yourself.
You too. Thanks, Trevor.
And that's going to wrap things up this week on Mining Stock Daily. Take care, everybody. We'll be back Monday morning with the news briefing. Be well.